Well, we have to take today's number in the context, as you pointed out, of expectations, but also in the context of what the casino stocks, and particularly Wynn and LVS, have done over the past 30 to 45 days. They've been down well in excess of where the market is. And so I think they're taking back some of the losses that they've given up over the past 30 days. They have been trading below 10 times EBITDA, and I can't recall them trading at that kind of level since 2008 and 2009. And that clearly was overdone, oversold, and so they're taking some of that back.
Okay, if you take Wynn, for instance, you have a price target on Wynn of $170. It's been hovering around the $100 mark or so for about a week or more. What do you think is going to drive that upside?
Well, look, I think we set that price target after their most recent second quarter earnings, as we did all of our other price targets. And if you looked across all of the price targets that we have, they are way above water. And so everything looks like a screaming buy. And as I look across casinos, particularly those that are domestic, but Macau as well, they all look attractive for a trade. Now, when we put it in the context of their longer-term fundamentals and when the market settles in, I think that will lead to some differentiation, which is not the case right now. Everything looks cheap.
I want to get to you on the domestic stuff, but one more question here on China. They just opened this new bridge from Hong Kong to Macau. It cuts by about something like 75% the commute that it would normally take someone to drive there. What's that going to mean to these mass market gamblers who've really been the driver of gaming revenue growth in Macau?
It is a positive, and I would only suggest that the mass market is the long-term future of Macau because they're driving the profit growth in Macau. When we talk about top-line GGR growth, that's really much more of a VIP issue. We're looking at China and Macau in particular as a very complicated place. We have a China macro. We have concessions that are expiring for each of the operators over the next 2 or 3 years, which poses a big risk. And so we're at an important moment to define what's going on in that market and how much macro will drive it. In fact, Jefferies is hosting a Greater China conference next week, and I'm sure a lot of my colleagues will have some interesting data points to bring back on what's going on in that market.
I want to talk about some casinos we don't often talk about. Penn, which just acquired Pinnacle. It has now 40 properties nationwide. El Dorado and Churchill Downs are the only casinos that are positive for the year, and you've been a big proponent of both.
We have. We actually have had a neutral rating on Churchill Downs, but what I would say as a category, which includes Churchill Downs, it includes El Dorado, includes Penn, is domestic regional gaming has proven itself over a very long time, including through the downturn, as a plus or minus 2 or 3% market. And so we consider it to be a very safe top-line business. And what's more attractive is there's a revolution going on now in that business for cutting expenses, cutting promotional expenditures, and profit growth. And that's happening across the group with El Dorado as a leader, with Penn as a leader, and Churchill Downs has executed extremely well also.
Yeah.